So we'll look at gold very shortly, but first I want to discuss some of the high levels of volatility seen on Thursday, which of course are due to Trump's tariffs being rolled out on Liberation Day. The general theme here is volatility. In the case of commodities, the daily ranges are generally around 150 to 300 or so % of their 20-day average. Same for Wall Street indices, you're looking between 130, 180%. In the case of the ASX 200, 350% of its usual range. Of course, indices all to the downside and risk off. Metals also lower. Gold lower. Why would gold be low in a risk off environment? Because when you get heavy losses in the stock market, you tend to find that portfolio managers want to cover some of their losses and have to close down their gold holdings to cover the losses on the stock market. Bit more mixed on the forex market, but again, high levels of volatility overall. A general theme there was US dollar was weaker against absolutely everything, and the Swiss franc and the Japanese yen were the strongest. Now, and when we look at what happened between the Swiss franc and the yen, Swiss against the yen rose on the day, which tells me that in this current environment, risk off favors the Swiss franc over the Japanese yen, and that could be simply because whilst both attract safe haven flows, there's less chances now of the Bank of Japan hiking rates because of the levels of volatility. Now let's look over at the gold market, which of course is in an undeniably strong uptrend, and it could continue higher this year, but every trend does need at least a little bit of a shakeout. And what we're seeing now on the daily chart is what I was expecting around 3,000, but clearly it didn't happen. It just closed above 3,000 and continued higher for the next week or so. But the magnitude of this daily range is actually its highest, most volatile day for gold futures since July 2024. And the fact that we've seen this volatile shakeout just off the record high, the top of this trend near this upper trend line, to me says there'll be a lot of burnt fingers at these highs. And that the psychology behind that means that whoever got burnt probably won't want to jump back into go long. They might want to short, but at the same time, they're kind of agonizing because the fundamentals to gold have not changed. If the markets really are concerned about global recession, there's going to be a supporting feature there for gold as a safety play. Now, the only time I think we can really expect a massive pullback in this environment is if things are that bad that traders had to get out of the market and go to cash. And that's when everything plummets. But then there comes a point you've got nobody to sell to. So it gets complicated on that one. In terms of this, I'm not getting too bearish on gold because, like I said, nothing's really changed fundamentally, but we do have this change in character. Now, during this leg here, we had a nice pullback, almost perfectly to the 38.2 Fibonacci ratio. And again, yesterday's low almost perfectly respected the 38.2. So maybe that is the low. I think for me, gold's not a market to be looking at over the near term, unless you're looking at very, very low time frames, if you have to do it at all. But I would expect some choppy trade within yesterday's range. Probably directionless overall. I'm not really expecting it to test the high or the low of yesterday for quite some time. But as time goes on, just comparing this candle to say this one, clearly this one's more significant, but this one still resulted in a 10% decline or 9% decline. So if we're going to see a 9 or 10% decline from this high, that actually takes you down somewhere around, incidentally, to 2,900 near this swing high. But I think in all honesty, I think maybe a more sensible place to look for any pullback is 3,000. It's a very solid round number that's been tested probably once in its record life. And it's right near the 61.8 Fibonacci ratio. So maybe we'll get there. It won't be pretty. It's a corrective territory. But I still think as the year progresses, we'll be looking at new highs. Anyway, hope that's useful. Wish you best of luck with your trading.